I made $45,000 on my last trade. And in this video, I'm going to do a complete trade breakdown to show you exactly what I did, how I took this trade, and why I took this trade. Now, if we go over to my Instagram, which I really recommend that you follow, I post my daily analysis on Instagram every single day about what I think is going to happen in the market. So before I get into the exact trade, we need to go back to Friday last week. All right. So on Friday last week, we had a mega sell-off. All right. So we were pretty much just consolidating for a couple of days here. So this is back on Tuesday through to Thursday, Monday, all the way through to the Friday on the 5th of June. All right. Now the 5th of June, you can see here that we had this really big sell-off, right? We haven't had a sell-off like this in a very, very long time in terms of volume, in terms of size and speed. It was an incredible, incredible sell-off. And I actually didn't even take a trade on the Friday, which is kind of regretful now that I look back at it. It's like, oh, wow, missed a really good move there. But what I found interesting, right, was that we had this massive sell-off on Friday. So if we go to the full 4-hour time frame, right, let's actually just pull this back a little bit. And I'm going to go on the 4-hour time frame here and show you what this looks like, right? So there's the sell-off, right, coming in there. And if I just press it forward a little bit, look at that. So that's the way that we basically sold off on the Friday. It was pretty intense. So then we come into Monday's session. Now on Instagram, what I basically said was because we had this massive sell-off on Friday, it's not something that we can ignore. Now I've been extremely bullish for pretty much for the most part of this year, and for good reason, right? Like if you look at the price, you can see that we've been printing pretty healthily since March. Look at this, just absolutely completely bullish. Price is moving up really nicely, right? But then you can see that this move that occurred on Friday wipes out so much liquidity on that bullish move, right? It really starts to press down. And for me, I saw that as a bearish beginning of what might be happening in the market. So I looked at that and I thought, okay, well, I'm not going to just now maintain my bullish bias. I'm not going to just go jumping right into the longs as soon as we start opening up on the Monday. So my analysis for Monday was that I was actually hoping that we were going to get a retrace into a 4-hour fair value gap. Now, if you want to see this and verify this for yourself, you can go and check out on Instagram. I had everything marked out on my chart on what I felt was going to be going on. So price basically, what I was anticipating was for price to basically come up to the 4-hour fair value gap like this, and then we start displacing down. So that was my general thoughts, right? That's what I thought was going to happen. So as we came into Monday, what actually happened was we began to essentially get a retrace, all right? A pretty healthy retrace right there, okay? And then as we came into Tuesday, which is just here, all right, so that's where we're going to be looking at, we basically came into this initial 4-hour fair value gap. Now, if I actually just mark this one out, let me just move me here. Let's come up here. All right, so the 4-hour value gap here. Now, I've actually just made a bit of an error there. Like the 4-hour value gap that I actually mentioned on my Instagram video was just this one here, right? So we had a 4-hour fair value gap here. All right, and we had a 4-hour fair value gap here. So my perspective was that we were going to basically respect one of these 4-hour fair value gaps because there's a lot of displacement that occurred with these gaps. Now, what you have to remember with the 4-hour fair value gap, or with any fair value gap, is that fair value gaps generally act like magnets, especially when they're on a higher time frame, right? So that 4-hour fair value gap essentially pull price in. This gap has to rebalance, and what that means is that price needs to trade into that gap, sweep up that liquidity, and then it can continue on the way that it wants to go. So either price was going to do this, right, and come down, or price might want to do this and take this one too, and then continue on its way down, right? So that was my prediction. That was what I thought. Now, on the Monday, we actually ended up taking a long position. So if I come back to the lower time frames now, right, on the Monday, we had a bit of a bullish move right here, I believe. Okay, so right there, I actually took a long position. And the reason I took the long position on the Monday was because we hadn't actually really taken out that 4-hour liquidity yet. So I felt that I could take a quick scalp into that 4 hours. So what we had here was we had this displacive kind of fair value gap that was formed just here on the 5-minute time frame. All right. And I'm going to get into my actual trade in a minute, but I'm just kind of showing you what I've been doing for the week, right? So we had a 5-minute fair value gap right here. Now, why is this one important? Well, the reason that I care about this particular fair value gap is because it's at 9:30. All right, it's a New York Open. I trade a New York session, so I'm very interested in what's happening during that New York session. So because we had that 9:30 fair value gap form, what I wanted to see was price basically come up and displace that fair value gap. So if it came up like this, I was looking for a move like this. All right. So I wanted to see inversion of that 5 minute fair value gap and price move to the upside. So we took a long position here. We did this live on my stream. We took the stop to the low, targeting the full 4 hour fair value gap fill. And then what happened was we came up just there. All right. So the entry was here. All right. So just to confirm this, right? So you don't just enter when the price basically goes and closes above, right? You have to wait for the price to actually close above the fair value gap. So the candle, the confirmation of the entry would actually be just there. All right. So that's your 5 minute confirmation. Took that trade there. And as you'll see, we came up and we didn't actually get TP. I broke even on that trade. So on Monday, I was completely flat and price came back down, tagged me out break even, and we didn't get anything. So that was Monday. Then if I actually look at the higher time frame, right? If you remember what I said about the analysis on the week, my thought was that price was going to basically tap this and then we were going to melt, right? So as we came into the session on the Tuesday, right? Price is still consolidating. You know, as we're coming into the session, we can just see how it kind of goes here, right? And as we're consolidating, my initial thoughts are, well, price really isn't getting past this 4 hour value gap right now. We are consolidating within the gap. So my feeling was that I am going to be looking for that bearish move coming into Tuesday. So you can see here that as soon as market opened, all right, we can go and check this out. As soon as the market opened, right, we had a push and we filled that entire 4 hour fair value gap. Then we come down very, very aggressively, right? We trade down into London low. So this little red line here that you can see, that's London low. We come down, we tag that out. And then price comes up again. And what I was simply looking for here was a simple fair value gap entry. All right, so I'm going to show you again what this looks like. So what I wanted here was as price started to melt down, right, like this, I needed to get a retrace in order to enter the trade, right? So I'm looking for a bearish move at this point. Price comes down, and then you can see what I marked out was this 1 minute fair value gap candle, which then was displaced with this 1 minute candle, right? So you can see here that this 1 minute fair value gap is going to be completely disrespected by this one, right? So this 1022 candle is printing and it displaces. Now, a lot of people here would have done this. They would have gone long, right? Because they're thinking, oh, you know, price going to reverse here. We had a bit of displacement here, whatever. You know, London low got swept and that's it. The reason that I didn't do that is my overall bias was bearish, right? I didn't believe that price is going to hold here because the overall bias that I have is that we are going to dump off. And if you look, you know, you can't ignore this sell, right? Like we had a push off the open from 930. We filled the 4 hour fair value gap. But then look at this sell. We absolutely melted for the next 30 minutes. So now we're not going to go and take 30, 40 minutes of a sell-off and just say, oh, well, it's just selling off because it wants to just retrace. That's not really how I felt. I felt that the price was very bearish. And I'm also taking into consideration what happened on Friday, that the initial push that we've had at the beginning of the week here, right, is just a retrace for a larger move and a larger displacement down. So as we came down, we'll get rid of that. As we came down, we actually were looking for a simple entry here. The way that I do that is the same thing, right? I've got 1 minute candle here. I'm looking for a close below this 1 minute candle to then give me displacement. As soon as that displacement occurs, I am then entering the trade there. I put my stop to the top of the swing and then I let it play out, right? We had a little bit of a chop at the beginning, but price absolutely tanked after this. Yeah, and that was basically the trade. So I initially kind of targeted down 2R. As we kind of came back in this retrace and went down, as soon as we took this low, I then trailed to here. And then as soon as we took this low, right, I trailed to here. Okay, and then as soon as we kind of continued down to here, I trailed to here, right, to that 4 hour wick. And that's pretty much how I played it, right? So, sorry, I trailed to here, just this level here at 28,577. That's where my entry stopped. My actual target was the daily fair value gap fill around about 28,200 because I thought that was a really great price for a really great point of reversal for price to actually hit. So I trailed here, wanted to see if we could keep going. Price then came back up and it trailed me out just there. So that's it. That's pretty much the play from yesterday. It was a great trade. Really happy with it. We're going to go into today's session and we will see how we go. So if you enjoyed that analysis, make sure you subscribe, hit the like button, and also just follow me on Instagram. It's at Joey XOTO underscore. All right, Joey XOTO underscore. Make sure you go and follow me, and you can get to see my analysis every single day on what I think is going to happen. But that was $45,000 yesterday, guys. Maybe it will happen again today. Maybe it won't. We'll see. But we're going to take it one day at a time, as always, and see how it goes from there. If you got any questions, leave them in the comments below. And if you want to see any other type of content from me, please let me know, and I will get cooking on that and share it with you guys. All right. So I'll see you in the next video.